Okay, so PolarX, as Kerry mentioned, our largest shareholder is Northern Star. They're quite interested in what we're doing up in Alaska. Let's start with this. Okay, so we've got Northern Star, Ruffer, US Global, and Lundin Mining as well as on our registry. It's quite tightly held, although there is a lot of shares on issue. Okay, so where we are in Alaska is quite important to infrastructure. We're along the Denali Highway. We're also in elephant country. I'll just put this one on. So up in Alaska, why Alaska? We've got some pretty big neighbours, but we've also got some high-grade deposits in the region. The deposits that we're looking at are all high-grade, but there is also big-scale potential there with porphyries. And you can see some of those numbers there for the large scales are impressive world-class sizes. As I mentioned, we're beside the Denali Highway, so we do have close access to infrastructure. We've got a couple of resources at Caribou Dome and at Zackley. Now, combined, we've done a scoping study on this as well, and we released the results to that in January this year, and I'll talk about that in a moment. What we do have is a lot of mineralisation across a 35-kilometre strike length, and we do have two mineralisation systems there. We've got early in the geological history with VMSs, which it's all taking place along the ocean floor. And then you've got the collision zone, which forms the Alaska Range. And post-docking, you've got some porphyries as well. Why I mention that is Caribou Dome is a VMS style on the border of that and SEDEX. And Zackley looks like it's a VMS that's been overprinted by a later porphyry. So it gives you an idea of like quite a lot of scale upside there. Mars is a separate porphyry project that we've drilled a couple of years back. We had a porphyry interval discovery there. Okay, so on Caribou Dome, we've been drilling there this year. We've had like 7% copper intervals that we've released to the market. We've drilled underneath that stuff, and we've got some more to update the market on soon, probably in the next week. What we found is this thing is continuing at depth. We've got detailed structural logging on it now. We're getting a much better understanding of the structural history and therefore the better way to target future drilling here. I'll just show you what some of that core looks like. So this assayed at 13% copper. We've got quite a bit of that in in those two holes that we released earlier. It's fine-grained chalcopyrite with pyrite. Historically, that's been a bit of a problem for Caribou Dome. We're separating it metallurgically, but with our scoping study that we released in January, we were able to improve the recoveries to 87.4%, I think it was, around that, almost, which gives us a concentrate of 21.7%. Now, prior to that, the concentrates were around 13%. You're going to incur a lot of freight costs and also penalties at the smelter. We've eliminated those issues, and we've also we put out the scoping study now. It's about $226 million Australian initial capex. Being such high grades, it's actually a fairly small operation, so hence the low capex. You'd be doing about 24,000 tonnes per annum of contained copper, probably mining around 750,000 tonnes per annum. So it's not a big plant that you'd need. It paid itself back on 1.6 years, but the prices that we use there of 8,500 a tonne for copper and 1,900 gold, you'll all notice that they're actually quite out of date. So since we did our scoping study earlier this year, prices have gone up substantially. We're looking 10% gain in copper, a lot of improvement in the gold price, as you can see already, and silver price has also gone up quite well. What that means is the payback period would be much less than 1.6 years if we were to start production today. The other thing that we are working on is, once again, after this program finishes, take another look at the resource. We've got a high grade zone that is grading well above the 3.1% average grade of the deposit. Now that, if you could isolate that, it's maybe 1.5 to 2 million tonnes worth of high grade, and you get into that first of all, then the payback period of this sort of thing would be under 6 months, which is getting into ridiculously good territory on turnaround times. So the next steps are to work on the metallurgy at Zackley, and I'll take you to Zackley. We can improve our gold recoveries there. Interesting thing with Zackley, as I said before, it's a VMS originally that's been overprinted by a porphyry system. So you've got a skarn with a VMS there. We've got a lot of intercepts that aren't in the current resource. We've got to just work a little bit more on structural modelling for that, which we've made a lot of improvements since we last drilled there. And we're going to try and increase the size of the resource of that. We've got opportunity out to the east where the Zackley East skarn underneath the north dipping thrust, which we're also seeing these north dipping thrusts at Caribou. You're finding the earlier VMS sort of stuff underneath that. We think that's a target sort of setting to take our exploration further afield along that 35k strike length. Something that is very interesting to Northern Star, as they are our neighbours just up the road at Pogo, also structurally complicated but high-grade deposit, and they understand that you need to get a lot of drill holes into this sort of thing. We're talking to them about mechanisms that we could engage with to get more funding into the company and make more, expand our drilling seasons and increase the amount of productivity we're getting there. It is a bit of a hindrance at the moment, just trying to get enough holes into the ground in the short season that you have. Okay, so the Mars porphyry discovery, there was one hole drilled in there in 2019, and we ended in about 110 metres of low-grade copper and gold, but you definitely have porphyritic rocks. You've got porphyritic veins, and you've got right at the kick-in zone of the potassic alterations when you're seeing the copper and gold grades pick up. Now, our other field area is Nevada. Nevada is elephant country. We're along the I-80. We're in northern Nevada, about 2.5 hours just to the east of Reno. We're in the Humboldt Range, which is, as you can see with this map, it's the next kind of Carlin type trend. So the Carlin trend, which most people have heard of, is around the Elko area where you've got Gold Strike, the really big, like 50 million ounce sort of deposits that Barrick Newmont joint venture are exploiting. Then you've got the Cortez Battle Mountain trend, and then you've got us in the Humboldt trend. Now, we're adjacent to a couple of mining operations. We've got Florida Canyon on our doorstep at Black Canyon, and then you've got Rochester Mine to the south, and there's another one in between called Spring Valley that is about to go into mine development next year. Okay, we also have some absurdly high gold grades in the historical veins that have been mined, like a Southern Cross Gold was presenting just before me. We've also got that set within a low-grade mineralized unit, much more like Carlin style. That means you basically can open pit this and you're not going to have any waste rock. Now, we've done IP work up on the mountaintop in recent times. Just showing the cut line there, we did almost 70 metres, 1.1 grams gold. That's actually more than twice the grade of what the average resource is at the Florida Canyon mine next door. So I think we're in the better part of the system where we are. So we've got a target anomaly, the Gold Ridge anomaly. I'll just show you that under the IP, and you can see where the Rochester rhyolite is on that IP section. It coincides with the Rochester rhyolite mapped, which has deep regional feeder faults, and that's what we think is responsible for the gold emplacement there. And and we're drilling, permitting. Hopefully we'll get that up and running shortly. That's it.